So let's go ahead and get started. It's 12:01. My name is Joe Massey. I am with Castle and Cooke Mortgage and know and work with many of you here on the call today. Thank you all for being here on time and early. And what we're talking about today are appraisals and everything an agent needs to know about appraisers. And let me start by talking about our co-host, Mr. Jerrod Paterson with First Alliance Title. Jerrod, who are you? Tell us a little bit about yourself.
Hey, really happy about this class today, guys. I'm Jerrod Paterson with First Alliance Title, and to me, appraisals are always one of the trickiest part of the real estate business. It's especially when you get those cuts. So I think it's one of the first times we've held this in quite some time. So I've been in the business for a little over 30 years now, between real estate and title work. So and investing started at a very young age. But my job is to be a resource to you. I love helping agents grow their business. I love sitting down and analyzing what you're doing on a daily, weekly, monthly basis. So please feel free to reach out to me and use me and let me help you analyze your business and see how we can help you grow it. So love doing that. One of my passions.
Outstanding. And we'll go ahead and introduce our presenter today, Mr. Kline from Brookwood Appraisals. Aaron and I have known and worked together for, 15 years, I think. And he handles all of my personal appraisals, anything on a transaction that I'm looking at, or, if I've got, some of the weird property I'm thinking about selling, he's the guy I call and say, hey man, can I give you $600, have you appraise this? So I've got a real good idea on what I should do with it. So Aaron has been just an outstanding resource, outstanding appraiser for myself personally, for other agents at your castle, for a lot of our clients for a number of years. And Aaron, let's turn it over to you. Tell us who you are, what you're going to teach us today, and we're excited to learn from you. So thanks so much for joining us.
Hey, thank you, Joe. Really appreciate it and great to be here with everyone. So as Joe mentioned, we do have this course here, Understanding the Appraisal, that's for real estate agents, can be 2 hours CE. We can take a break there in between there briefly here to get some info. And Joe, that's when I'll send you that outline too. I didn't have that ready to go there, but I'll send that to you here in a little bit so that everyone can have access to it. Yeah. So I started appraising there in 2006. Worked for private company, private firm here in the Denver area first, and then eventually, as many do, started their own independent firm there, and have been working in the Denver up to Boulder area. That's kind of where my wheelhouse is at here in the metro area between Denver and Boulder. Primarily, I have worked with lending appraisals, but of course, you have to expand into some other areas there and a lot of other questions that come up. And so we'll talk about a lot of those things here today of how appraisals are used in other capacities of life with decision making and some different things. But a lot of you are likely interested in the aspect of how this affects real estate agents and affects purchase contracts, what this does in the lending world. And so hopefully today we can get all that information out to you. As far as question and answers go, just feel free. You'll be muted here, but you can use the raise your hand feature there to indicate you have a question. You can send a chat that may go to Joe or Jerrod there. We don't mind throughout having question and answers done. And then, of course, we'll reserve some time at the end to talk about anything that people have a question about in that regard. So Joe already went over leaving the camera on if we want our CE there. So appreciate anyone who does want that to make sure they follow along with that. So let's go ahead and get started. I'm going to share my screen.
Yeah, just a reminder real quick. Again, if you want to the CE credit, we've had some people join since we made that announcement. But if you do want CE credit, you do have to have your camera on for the entire time.
Okay, sounds good. So is everyone able to see that? Joe, just give me a verbal there since I
Yes, sir. Looks good.
Full screen. Okay, sounds good. So we'll get started here. Understanding the appraisal. We're going to talk about common appraisal questions and then a little insight on the future of the profession and kind of some things that will be affecting you down the road that I think most agents really would like to have access to. So we'll start here with our next one here. And so I gave a little bit of that already here, but that I work with Brookwood Appraisal, and I am a certified residential appraiser and a member here of the Appraisal Institute, and we focus primarily on mortgage lending appraisals, but do have a lot of insight on some other valuation types. So I did forget to ask if there's any appraisers in the audience. If there are, please feel free to introduce yourself as we go along in our program here. And if there's any insight that other appraisers have, we'd love to hear that. And of course, Joe and any of our others here that have a lot of experience with this, some of this overlaps a little bit into other areas. So please feel free to speak up if there's some insight that any of us can share with each other, because it's about all of us educating ourselves and educating each other here. So we appreciate any kind of insight that people have. So let's go on to our next one here. So I like to start here just with a question about how do you view an appraiser? And there's sometimes a kind of a stereotypical view that sometimes people may have about appraisers. If you just thought in your mind, okay, what does an appraiser look like? I won't go into what that is, but sometimes it fits a certain profile that people have kind of begun to have been accustomed to, especially in the past. But a lot of that is starting to change about who appraisers are and getting more people into this field and in different ways. But those things on the right there are things that people sometimes get frustrated with. They just think that the appraiser is there to maybe wreck the deal, basically, or something I just have to get through to get this completed. So we want to think, though, a little bit about how the idea of an appraisal is really a beneficial tool in your real estate practice. That it doesn't just have to be a number that we have to just get past here for a transaction, but that, you know, it has some purpose here, or that it's something that we can use to help us with a situation here. And so I like this little image here because, you know, we think of appraising and there's this just big market here, but really what we want to know about is that individual property, like this one here with the red roof here. It's telling us, hey, what is this property worth? And what if that property is yours, or is your friends, or your parents, or your clients? Now, all of a sudden, this really matters here, because what do we think the value is of this particular home? And so that's what appraisals can, you know, help with here. So we're going to look today just really as just kind of a way of going through this, or just questions that are commonly asked of real estate appraisers. So I used to have it kind of numbered. We're kind of broadening from that, and we're going to just talk about common questions that come up, and maybe today we'll add some new questions that come up. But these are ones that for many years people associated in the real estate field have asked here. So here's the first one. What is an appraisal, and does my client need one? Now, the first part of that, what is an appraisal? There's a real simple definition that was in a dictionary here. Basically, the determination of value, worth, or significance of an item. And that can be with real estate, or we know with personal property, businesses. Now I'm starting to see, as you do Google research and you're trying to get material, they're referring to, in human resources, a consultant or an employee even. Like, we're now starting to value people as if they're property here in businesses. So this idea is to determine the value or worth or significance of something. So the value comes in there being a third party, an independent, unbiased provider to give this opinion of value. Now, it is important to remember that it's not always fair market value. That's something we're going to talk about a little bit later. And it's not always the current value, as in right now. It could be, what was the value of this previously in the past, or what do we anticipate the value of something to be even in the future? So we sometimes get hung up on it's a certain kind of value and it's at this time right now. But really, appraisers can accomplish a wide variety of things there, both in the past and the future, and for a different type of value. And so we'll talk little more about those types of value as we get further along in our program. Just a little bit of background. You may wonder, where did this all come from, having appraisers? So back in the 1930s, there was appraisal guidelines that started, coming out. In fact, realtors and appraisers were kind of lined up very closely for a long, long time. But then in the 1980s, the savings and loan crisis really kind of brought out some of the problems here in there not being a licensure, and that pretty much before anyone could say they're an appraiser. I've done this for X amount of years. I do this, I do that. And so banks or different lenders just hired people and just went off their credentials. But it became apparent there in the 80s that this was going to have to become licensed. And so that was a big turning point really in the profession, that now there was going to have to be some accountability here with a licensure. So the profession follows standards and guidelines here in something called USPAP. Now, this is not something that real estate agents ever probably hear about too much until there's a problem. Until the appraiser's like, well, according to USPAP, I have to do this, this, and this. So it's good to kind of understand what is this USPAP that's guiding, these appraisers that they feel bound to. And so it's a document that's updated every few years. It's called the Uniform Standards of Professional Appraisal Practice. And basically it establishes, recognized, procedures and practices and ethical rules for how appraisals should be conducted. So it's what appraisers are being measured here basically by. And it is very important here. This first bullet point identifies a quote from it saying that compliance to this USPAP standard is required for state licensed appraisers involved in federally related real estate transactions. So that's the real hangup. Anyone can do an appraisal and have some different methodology for maybe personal things that might not be as regulated. But when it comes to federally real estate transactions, that's when adherence to this USPAP is required. That's when they have to, and that's going to be a big majority of transactions out there. Now, also USPAP, I note in here is what's used here by the Division of Real Estate here with Colorado. So if they receive a complaint, they're going to go back to that because it's a recognized procedure here of requirements and standards here for appraisers. So it's kind of like the Bible for appraisers. This is what they're measured here by. If there's a deficiency, it's pointed out here in this particular document. Now, how does some of this affect real estate agents? Well, just keep in mind that agents give valuations all the time. If I were to have a lot of the real estate agents here look at a particular property, my guess would be that if we all had to give a value in the end, real estate agents would be just as good as an appraiser, maybe even better at times of an appraiser, because real estate agents are really in touch many times with exactly what is going on right now. They're interviewing market participants, they're showing them houses, they're seeing the deals that they're missing out when they're putting in contracts and things. So they know exactly on the moment of that weekend sometimes what's kind of going on in the market. But the challenge is that a lot of it is off of a feeling or a gut or the information that we've been taking in. Appraisers have to put that kind of information and put some facts behind it. So they have to put it in a report. They review a property. They look at the market. And then they can't just say, well, I think it's this. They have to say why they think it's this and put it in some kind of professional format that could stand up, and it can be in court, or it could be refuted if challenged. And so a lot has to go into that to really put something with some evidence and backing here behind it, even though the number in the end might be same. So real estate agents may be asked at times to give a valuation. And just keep in mind this thing here from the Colorado Division of Real Estate, which cautions brokers. It says when a broker prepares a CMA or a BPO for any reason other than the anticipated sale, the anticipated sale of or purchase of the property, the broker must include a notice stating this evaluation was prepared by a licensed real estate broker and is not an appraisal. This evaluation cannot be used for the purpose of obtaining financing pursuant to section 1210 there and the numbers there. So we want to keep in mind here, if it's for a sale of a property, a pending one, yeah, we can give whatever value in a CMA and a BPO. But if it's for anything other than that, or if we even are worried they might use it for something other than that, you need to have that disclaimer on there. So the biggest one I see this in is with tax assessments. You probably started getting the calls here in the past year. Hey, my taxes are going up. I need to refute this. Give me some comps, this and that. If you send over a report, that's going to be up to you. You have some credibility for what you have in your field here, but you really need to make sure you have that statement in there, because people could misconstrue that this is an appraisal and held them to the same standards as what's in USPAP, which primarily starts with having someone that's licensed to be able to achieve that. So there are sample statements in the MLS CMA that you've probably come across. Those are things you can just make sure you include in an email correspondence or anything that you send out that way. So that leads to a question, does my client even need an appraisal? Now, this happens to me all the time. That's why we start out saying maybe, because there are only certain times when you have to have an appraisal. Real estate agent can usually give excellent information to someone thinking about buying and selling, but there may be times when we want something a little bit more, or that we want someone to look at it from a third party here. So it just depends. I get people who call me though and say, yeah, my agent says I need an appraisal. And I never know how that conversation started. Why do you need this? What's the purpose of this? And sometimes it's just because that's how the agent likes to do things. They like to have an appraisal done. Other times there's just confusion. Or people think that they're supposed to for their lending or different things like that. So we have to educate people of when they need an appraisal and then how they get those. So an appraisal is often required or is beneficial in many of life's major events. So think about maybe some of them. I'm going to go through them here next. They all begin with the letter D, but it really can help us with different things that we have in life. And so here's the biggest one on the left, top left here, debt. So when we are incurring debt, there's oftentimes a reason that we get an appraisal. So you're in a mortgage transaction here, your clients are with real estate, and they say, well, why do I even need this appraisal? And the answer is you don't. You don't have to have an appraisal unless, oh, you're wanting to borrow money. Yeah, if you want to pay cash for things, yeah, you don't need an appraisal. You can just go out and buy it. But if you want to incur significant debt or take on that kind of liability there, then it's appropriate that someone may want to have an appraisal of some form, a third party here, just to confirm that everything is kind of lining up. And so that's kind of a helpful thing to share with clients sometimes, that's why they're getting ready to take on perhaps 100, 200, 300 million kind of debt that they're going to take on due to a property. And so it may be that we need to have an appraisal that's in there or that it's required. But here's some other areas that we want to keep in mind. Divorce here is the big D, as we say. So when that happens, then sometimes it's beneficial for both parties to have an appraisal if there's some dispute, or perhaps if it's mutually amicable or a different format here, then maybe one party will get an appraisal. So it's a third party that this side thinks it's worth this side thinks it's worth this, and appraisal can help bridge this gap here and say, hey, from my perspective, my opinion as an appraiser, this is what I think it's worth. The other ones here are duty, dealing with taxes. That's a very big one after everyone's taxes went up. Comps from a real estate agent can help in refuting taxes, but I will say, in just a little bit of exposure I've had to the process there, if we go and pay and have an appraisal done, sometimes that can carry a lot more weight. when we're trying to refute taxes that are assessed to us. Donations, we want to give something up. Usually an appraisal can really help there to really say what that's worth here for our tax relief purposes. Disaster, when things get destroyed, I know we all hate this. Insurance says it's worth this. Something else says it's worth this. And sometimes an appraisal can really help in that matter to determine what something is worth after it's been damaged here. And then death is unfortunately necessary during estates. This is a common one here that we get where someone needs an appraisal done when someone from the estate died. So it may be that we have to go back, even months when the event happened here, that we have to say, well, what was the property worth on that particular date? And then also here with disputes, one party thinks it's this, another party thinks it's this, and just having this third party objective opinion really, really can be helpful. So those are just some of the reasons when we need an appraisal. For real estate agents, that first one, debt, is the biggest one with mortgages here. But please keep in mind, there's going to be other times in life when people may call you and say, hey, do you know an appraiser? I'd be happy, as I've done here with Joe for many years, to be able to help out some of these other areas that come up when people do need it for these big decisions in life here. So here's another question. Is there a shortage of appraisers? Now, this doesn't mean much at certain times because we just want to order appraisals. But what happens is when you're making your transactions, you do need to line things up with the correct amount of time that's needed for an appraisal. And so sometimes there is a shortage. Volume is super high, and we find out, oh man, it's taken appraisers, 2 weeks, 3 weeks, 4 weeks to get things done. And we had that as one of the first parts, perhaps, of our transaction when we're making our dates in the contract. And then we get frustrated there because of how long it's taking. Other times, like you'll find out here shortly appraisers can probably get out there the same day you call them. So when the volume is lower, then appraisers are going to be able to have quicker turn times, and then we can factor that into our contracts there. So it is good to kind of get a feel. Okay, what are the turn times right now that are going on, and that can even relate to what are the fees. Those usually go hand in hand, unfortunately. So right now, in our little comic here, we're in the latter side here. We're in the side with low volume right now. So we won't go into this too much, but appraisals are usually faster in areas that are within the city, within areas that are in the suburbs, areas that can be done faster. Keep in mind, when you have rural properties, when you have mountain properties, when you have complex properties, it's going to take longer to usually find an appraiser. And then secondly, for them to get that report done. The levels are slow to adjust, so it's just not easy to bring on a lot of appraisers fast into the profession. I listed some of the requirements that are there. There are a lot of new ways to get into the profession right now. There's even ways without having a supervisor, which is what was a big hangup for many years. But you will find that it's still slow because of the fact that they value experience. And so it just takes a while to get that experience. And so that's why it's hard to kind of add people to the profession fast. So let's look at the levels of lending applications here. And that's going to tell you a little bit about where things are at right now, if you're wondering how fast you can get an appraisal done right now. So the yellow lines kind of shows the numbers of appraisal licenses, and you can see it's remained stable for many years, but it's actually declined here recently, and that's partially due to the volume, but also some other changes in the market that are kind of happening into the profession, I should say, that we'll talk about. A couple things that are kind of interesting about this chart, though. If you ever wonder if there's seasonality in the market, this proves it right here. So the purchase volume just really shows this perfect pattern every single year. That's going to happen here. So this is from Freddie Mac here, and they're monitoring the appraisal volume for Freddie Mac. This wouldn't be with anything else here. But refinances, as you would probably expect here, huge spike with this thing here called COVID that happened for a few years. And unfortunately, after the huge spike came just a dramatic downfall here. So if you were to measure that right there, that's going to be in the neighborhood of half of what was being done, here just in a normal time here in the previous few years. So it's just significantly changed right now, and still is well below what the normal appraisal volume would be there.
This is a great slide, Aaron. This is super good to see, right? That yellow line, so we can see how many appraisers versus how many orders. That's a great slide. Thanks for sharing that.
Oh yeah, no problem. There's a couple more here that are kind of similar here. And yep, I'm seeing a little bit on the chat there too, now that I'm seeing that. And someone were asking if it's 2 hours. It is 2 hours, yep, for the full CE there. So just holler, Joe, if there's anything else we need to let everyone know about.
Absolutely. Yeah, I think we mentioned if you have questions, type them in the chat, and then I'll be monitoring that and get those over to Aaron as we're going along. So keep going, Aaron. Thank you.
Okay, yep, sounds good. So this was GSE appraisals per kind of per state. Just shows Colorado's kind of right there in the middle right now. So we're probably kind of able to keep up somewhat with the amount of appraisals per appraiser. So this is using kind of a ratio there. All I take from this is like what is going on in Nevada, Texas, and Florida, that despite this big slowdown, there's apparently epic amounts of appraisals being done in those states. That could be due to higher volume, or it could be that there's a need for other, appraisals are also needed for other reasons, not just the mortgage side, but also liquidation side. So there's just a lot of activity in some of those months right now. That's kind of interest here. So we'll keep moving here. So this is another slide that shows kind of the same thing. This is refinance application levels. And I find this interesting because it goes back from 2004. So of course there's been seasonality and different things with interest rates. Look here, this was the Great Recession, we called it here, 08, 09. Was really big, dramatic. But there's been other fluidity that's happened here at different times. But look what happened during COVID. That's just off the charts when you see what happened there. And so right now, when we're trying to kind of wrap our minds around what is really going on with the market and different things, we're still feeling some of the effects here that happened during COVID. When you see how much activity happened just in that time compared to, then how far it's fallen off afterwards, just kind of helps get some perspective here of why we have such low volume right now compared to what was happening the few years before. And that's the same thing. This is from MBA here. Same thing, just showing purchases and refinance. I forgot to put the legend in here with it, but obviously the refinances are down here at major lows here. But once again, you can see just what happened there with COVID, and when there was such interest there and people changing their mortgage rates. This just is a little thing here about just mortgage rates in general. And it's always helpful just to go clear back. Freddie Mac will let you go all the way back here to the 70s to see, what people are used to. And I know you hear people say, oh, well, back in the 80s, we had interest rates that are whatever. Of course, you could buy the house for $50,000. So it did kind of wash out. But it is helpful to kind of see, wow, this trend here is also affecting the volume trend. So that's when interest rates went up, then volume went way down here. So it just helps to kind of see where we're at in the profession here a little bit. So what are the differences between Fannie Mae, VA, and FHA appraisals? That's just a really big question that people have all the time. Why, my clients saying they want to go FHA, or you're recommending that there's some options with VA or Fannie Mae or different things. When it comes to the appraisal, we're not going to get into all the regulatory parts here of the mortgage, but when it comes to the appraisal, there's some similarities, and then there's a few significant things that you need to be aware of as a real estate agent of how that appraisal is going to go. So let's identify first who's kind of over some of these things. FHFA, Federal Housing Finance Agency, has oversight over government-sponsored entities, and so they'll have some guidelines and parameters that they expect all of their market participants to work with. And some of those are Fannie Mae, the big banks, we'll just call it, then Freddie Mac representing smaller banks, and those two both have selling guides. And in those selling guides, it will say, okay, appraisals have to be done in this manner. They have to adhere to this guideline. Here's the things that we want noted in the report. Here's the things that we expect. So FHA has its own guidelines that they have. Now, there are similarities in principles here, but then they've added a few other things that they want. For instance, they have in this handbook here that they have certain safety and soundness guidelines that they want adhered to. So they may want a handrail for all steps. They may want to make sure that any cracks over 3/4 of an inch are removed here so that people won't trip. They don't want lead paint to be on a property. And so we'll talk a little bit more about some of those things, but it's an example of how they may have slightly extra guidelines that they want for their particular loans. And the VA is the same way. They have some extra guidelines that they have for them to be able to secure their loans. So basically what it is that they're going to secure this loan, they're going to accept this, and they want the appraisal to be part of this package to say, yes, this was viewed by this appraiser, and he says it's worth X amount here, and this becomes part of that package. I threw USDA in there. They actually follow HUD appraisal guidelines. If you have a USDA deal that you have coming up, then just remember that it's going to be the same here as FHA. They're going to follow HUD appraisal guidelines. Now, all of these major players here, we'll call them, they will use the same common appraisal form. Now, for single family use, there's other forms out there that are approved here, but the biggest one is for single family. It's this 1004, and it has this UAD data set, which is basically that it requires you to put certain fields to have a certain request here so that they can have some conformity with all these different reports. Now, Fannie Mae doesn't share they're using the same reports, but they're not sharing them with VA. And FHA doesn't share theirs with the VA, and Fannie Mae, they don't all work together that way, but they are using the same report and just have some things that needed to be added to it. Now, this was as of January 5th here, but this would be helpful for you to know here that in general, conventional dominates things. The last time I pulled it last year, it was closer to 75%. So the reason this is kind of important is that Fannie Mae and Freddie Mac, they're really big drivers in the loan world here. They're making a lot of the big decisions, and then they wait to see if FHA and VA will follow suit. This is how it usually works. So when Fannie Mae or Freddie Mac come up with a new policy, it really does impact everyone because they are such a big part of the market that they're doing here. So this is an example of the appraisal report form. We're not going to get into too many details on it, but basically, if you saw page 1, it's going to be a lot of the details that are of the property here, and on page 2, you can see comparables 1 through 3 there, and we'd fill in there the information there, and then we can make these adjustments on there. We're going to talk a lot more about that as we go along, but these reports were designed to be used with a typewriter. And software has helped to change some of this, but there's a real impasse that's coming up now because it's a little bit archaic. And so these forms are being redesigned right now, but they're not going to be forms anymore. They'll still be able to be printed out as a form, but they are going to be a dynamic report that's going to be something moving forward. Instead of a certain form for a property type, it is going to be a dynamic report that you start, and then it'll kind of start whittling you into the area that you need to be in as you enter in information. It's going to be a gigantic change for the industry, and it'll probably be, a few years to totally get approved across all the different entities that are using appraisal reports. But you will begin to see some differences in how this looks as a report to your clients here. So a big question that comes up here is what can I say to the appraiser? And then secondly, who owns the appraisal? So when we come up with what can I say to the appraiser, you can say anything. But what happens is that some of the guidelines really cautioned here about anyone unduly influencing an appraiser. And that's probably what you want to remember as an agent, is to avoid pressure. Okay, so here's an example. Wow, you're there at the property, you're with the appraiser. Agent says, wow, this has been a tough one. We've had this come up, we've had this come up. You're here now. I'm hoping everything goes well. That's getting close, but that's just facts. That's just conversation. But then the pressure comes into, oh boy, I really need this to work out. I need the commission. We need this to hit this figure. Okay, now we've stepped over into the line of, now we're adding pressure here that they need to achieve a specific result. And that's the kind of thing that appraisers may decide they can't accept an assignment, or it could compromise your transaction if even the lender decides that they're not comfortable with this any longer because of maybe something that was said during the process. So we shouldn't feel as if we can't speak to an appraiser. We just need to be careful that we don't have influence. And so the reason that's helpful is sometimes agents just act like they shouldn't even talk to appraisers, but that's not the case. Just stick to the facts of the property and of the transaction, and then find information that's helpful, even though it's going to even be helpful to you as well to be able to get the deal done here. So things like the updates to the property, or some of the comparables that you use to establish the list price, or that you feel supports the purchase price. All that can be very, very helpful information. We should feel like we can share that there with the appraiser here. They are going to appreciate having that kind of information. The person that owns the appraisal is helpful because, let's do it from this position of the seller here. They're on pins and needles also. Hey, did the appraisal come in? We're waiting to hear. We do have to remember, though, that the appraisal is technically not their property. Now, it is their property that was appraised, but the actual report is the property of the client, who is usually the lender in a real estate transaction, but the buyer is entitled to a copy of that by law. And I'll show you that here in just a little bit. So sellers just oftentimes want to know, what did it appraise at, or what's this, or what's that? Technically, it's not their information, and the buyer can choose how they're going to share that. As you know, a lot of times seller will just hear, hey, everything worked out, and the buyer's moving forward here with it. And then that could be, any number of different things there. So keep in mind the borrower should get a copy 3 days before closing or sooner. And so here's something from the Consumer Financial Protection Bureau. If your buyer is wondering that because they paid for it, even though it's addressed to whatever bank, they're entitled to receive and it says free copy of the home appraisal. So it usually isn't actually free, but whatever your agent or your lender has worked out there for how that's going to get paid here. So that's something to keep in mind. So who orders an appraisal in a real estate transaction? Well, a personal appraisal can just be ordered directly from an appraiser. So as Joe mentioned, he may have a client, they're wondering about a property they're thinking about buying, maybe with cash or with different things, or maybe they don't quite know if their agent's steering them in the right direction. Then they can just hire an appraiser, and they can just call them directly. There's nothing to prohibit that. They make an agreement between the two parties there, and they keep moving forward. When you come to mortgages, then the lender of the buyer will have some kind of protocol that has to be followed here. And so we talked about Fannie and Freddie being the big players here. They follow what's called AIR, the appraisal independence requirements. And so they established things that appraisals had to be ordered in some kind of way that there would not be any kind of influence. And so that's in-house. They don't want that to be where this person or that person is potentially influencing the appraisal. So it can be by using an AMC. And this is something we'll talk about as we move forward here about their role in things. Because what a lot of lenders now, as things got bigger, they wanted to use companies like appraisal management companies that they can just, hey, here's the appraisal order. And then that management company goes and finds the appraiser. And so that sounds like a good idea. There's definitely a barrier there. There's this third party. But what happened is they also take a piece of how much it costs there. And so that has added costs now, unfortunately, to the consumer here because there's this extra party that's in the middle of this now. Another way around that is by using an in-house panel. So for instance, you may have people in the lending side, they order an appraisal within their lender here, within their company, but they'll have some safeguards and precautions put there that appraisal can be ordered without direct contact with the actual lender there. The VA has a separate panel that they use, so they maintain their own panel of appraisers, but they have a way in which appraisals get ordered. You have to get registered with them, and then they assign that from them directly to the appraiser. So that's their way of having a safeguard. FHA has another way, although you can select them, but you have to select them off the FHA panel. But the lender has a little more control in that one of just being able to use it. Now we got to think for just a little bit here about underwriters. So when we have these matters that come up, especially when an appraisal has some revisions that are needed to it, or perhaps your transaction is approved, except that these things have to be done. And that's usually a role here of an underwriter here. And so they can condition the transaction, but also the appraisal. So the reason that this is important, because we talked about these AMCs, and now we're talking about also the underwriters, and then you have the appraisers. And so all three of them can have this interest here in this report. Now, a lot of times they'll hear, well, the appraisal got conditioned for this and this, and then it's immediately to the appraiser that there's some animosity, we'll just say, or some frustration. But a lot of times that can be also the AMC has made some conditions. They said, well, if we're going to be this third party, we want this to meet this, and this criteria. And then also an underwriter can see things in the market. They can see some things that conflict. It comes up as some red flags when they're review. And so they can ask for some information. So here's an example here, especially in declining markets. It's not uncommon that the appraisal may come in. We say, hey, we think it's worth this. Everything else qualifies. Here's what the market's doing, but the market's actually declining. But we still feel it's worth this amount. So an underwriter there can condition it. They notice we want the appraiser to provide 2 comparable sales within 90 days of the report to support the appraisal conclusion. And it may be that it's a rural market and there's not a great fit here. And so the appraiser may have their hands tied here a little of what they can do. Well, that really initiated from the underwriter, not so much from the appraiser. So those are some of the other players here who are making decisions about this appraisal that really may not still be what the appraiser feels with their opinion of value, but it's in order to fit their criteria of that lender, they may have certain extra restrictions. So another question here is, how can I prepare a property for the appraisal? So keep in mind, it can be beneficial to be at the property when it's viewed. That's some of that misinformation that's out there that we can't be there or something like that. Instead, I would encourage you to be there. It's safer. We can all open the door. We make sure that it's uninhabited. There wasn't anything surprise that was there. So meeting the appraiser at the property can really be a good idea. Now, another thing here is that make these appraisal appointments, and then you can go over the condition of the property at the appointment. You can Let the occupant know that it's going to be photographed. That sometimes is an issue that comes up, that people don't want their home photographed. And then the question there, what should the occupant not say to the appraiser? So if we're not going to be there, then make sure that some of this is passed on to whoever the occupant is. Sometimes it's a renter, sometimes it's the seller. But avoid situations that disclose information you don't want shared, and then avoid comments about pressure. So the reason, we say this, maybe you've determined how you're going to handle a particular condition problem there at the property. Maybe you have a renter that's there at the property. You decide not to go there, and the appraiser goes, and that renter decides they don't want to leave the property. So they're going to point out every single little thing that's going on with the property. Hopefully that wouldn't impact things, but it could just add more challenges to your transaction here. So why not be there, help guide that conversation, or even have the, tenant away perhaps there when this happens. Or, if you have an occupant, you're a little nervous of what they might say, just eliminate that by being there with the appraiser to help out with that. I will say that what I receive a lot of times is I send out an email requesting an appointment. I tell them what they can share, that we'd like to know some of the updates. We'd like to do this. What time can we meet? And so many agents just write back, lockbox 1476, help yourself. And you're just like, wow, you don't want to share anything about the property or about the transaction or what's going on. So there's some real extremes. Some meet there and maybe are, share quite a bit. Others just do. I hate even to call it the bare minimum. It's so low. So then, of course, people are surprised when maybe the report doesn't come out how they anticipated. Some of that could be maybe avoided by being there and making sure all the information is shared. So we can take a break right now. Excuse me one sec here. Just gonna stop sharing. Before we take the break, if there's any questions that anyone has about what we've talked about so far, just speak up or raise your hand or anything like that. If not, we can take a 10-minute break there.
Yeah, what do you guys think? Is this helpful for you so far? I'm learning a lot. Cool. I see a lot of heads nodding. Great. So why don't we pause and we'll come back and start right at 1 o'clock. So if you need the restroom, drink of water, check some emails, whatever you need to do, we'll pause here. Aaron, you take a break as well. And think of any questions that you guys have, and we can address those when we get started back at 1 o'clock. Thanks, Aaron.
So yeah, any moment here, anyone's got any questions or anything like that, we can definitely entertain those. Or if you got some horror stories that you'd like to tell of appraisers, maybe you can share that with us about this happened to you one time or that. We always like to hear those so we kind of know what people deal with. So a big thing that will come up here is that you may get a repair request indicated on your appraisal. So it's not just that you have a value that's placed in that appraisal, but then also whether it meets the criteria that the lender is asking for. And so we talked a little bit about how there's these big players out there, Fannie Mae, Freddie Mac, they have certain criteria. FHA also has some criteria, and VA also has some criteria. And others may have some things too that are from maybe private money lenders or different things. They can have their own criteria. So you may say that the property is worth X amount. Maybe you have it under contract for 400,000, 500,000. Then the appraiser comes out and he or she says it's worth 500, in my opinion. However, FHA requires that I ask about this particular matter here. And so then we'll get a repair request, something that has to be resolved, even though the house is worth it, but also this has to be perhaps fixed here before we can be able to submit this. So the appraisal is for the right amount, but there are repair requests that are in there. So let's talk about this just a little bit. Some lenders do have more stringent guidelines because of who their clients are. So, for instance, FHA really tries to focus on trying to get consumers into homes. They want those homes to be something they can live in. They're not doing this for investment purposes or for other interests. They're doing it to try and get more people into homes and have home ownership. That's one of their focuses here. So they want that property basically be ready to live in. So it can't have certain things that they may consider to be dangerous to the property or that could be financially difficult for that person if once they get in there. They want that to be a live-in ready home. VA is the same way. They just have a high regard for who their clients are, which are veterans and people associated with that. And so they want the property to be ready to go. They want it to be safe and they want it to be sound for who their clients are. So the repair request will be indicated on the appraisal, usually in the addendum of some sort that, according to this perhaps portion of the guideline, it says that properties with this particular feature will not qualify for the appraisal. And so part of a loan condition can be that they can get out of that because of that reason. So you need to keep that in mind when people especially choose VA and FHA ones. You may get through your whole inspection and you get through all the negotiating there with that, and then you have the appraisal come and you think, oh, we're good here, and then they condition it for another repair item that can be on there. Now, here's the most frequently requested ones would be lead-based paint. So any property that's built from 1978 and previous potentially could have lead-based paint that's been used. And so if it is from that age forward, and if it has some flaking paint, the appraiser likely is going to condition the appraisal for that, saying it's going to be worth X amount, but this would have to be repaired first in order for that appraisal to be able to go through. So that's the biggest one that's out there. So whenever you're selling a property, just brace your seller for that. If it's 1978 or sooner, then, and it has flaking paint, then that will have to be corrected here if they use FHA or VA. The other things that can come up quite a bit are trip hazards. So you may have massive settlement, and for a conventional loan, they may be a little more lenient with that because the people can do with the property maybe what they would like to. But if it's FHA or VA, they're going to want those significant trip hazards to be taken care of. And I believe it's 1/2 inch or 3/4, but it cannot be too much. That's there with sidewalks, with garages, with driveways, things like that. So it is up to the appraiser how they want to kind of handle that. But if it's significant, they can put that there on there. So be aware of that beforehand and make sure you brace your seller. This may be something that has to be done. Another one can be handrails. All of these have gotten a little bit better in recent years. They've lightened up on some of them, so it's not so stringent. But if there were safety concerns of going down certain steps and there wasn't a handrail, then that may need to be installed there. So the appraiser, but also the underwriter, as we talked about, have a say in these things. An underwriter can override certain things here if they don't think that it qualifies to the guideline. But they will want to see that that is repaired, so they'll usually send the appraiser back, or they will send someone else that can verify that this has been completed here. And so that can be an extra thing in your transaction you want to keep in mind. What you want to think about is preemptively fixing some of these items that could be a lending issue. So if you're just aware of that, you can just brace your sellers for this. Hey, why don't we just do this before it becomes an issue? It'll go faster here. Let's get this repaired beforehand because this may be an issue that comes up on an appraisal. So that's something to think about. And of course, if you have an appraiser come out and perform an appraisal for you before you even list it, then that could be something that you can ask about. Do you see any issues with this going FHA or VA here? Some other issues can be the roof There's going to be certain guidelines with how much life it has left and then how many layers of shingles it has on there. So an appraiser can take a look at that and give you some ideas if there's going to be any issues with some of those things. So here's the big one that comes up here for questions from real estate agents. And that is, what should I do if the value of the appraisal is lower than the purchase price? So depending on how the market is going, this can be more of an issue at certain times than in others, but it's almost always a concern. But let's use the example during COVID when all of a sudden purchase prices started just going escalating. And as we've talked about, the appraiser has to use some of the information from previous for their report. They can't use listings and contracts and active properties here. They have to use things that have sold. And so sometimes those home prices that have sold take a while to catch up in a rapidly increasing market. And when they're rapidly decreasing, it's the same. It can seem overinflated perhaps for just a little bit. So it's going to happen that sometimes someone offers more on a property than what the appraisal may be able to support with sales. And especially in a rapidly increasing one, like in COVID, as we remember, there was times when people were offering 10, 20, 30, 40. I mean, I heard outrageous things up to 100,000 above asking here at times. And so there was some real predicaments that started coming up. So here are some options that you can think about. Of course, you got to talk to your employing brokers about a lot of this, but preemptively consider an appraisal gap. So if you're getting a pulse on the market that, hey, we're starting to get offers above our list price, especially, that's when we really have some concerns, then consider having that written into your contract up front. And that way, the appraisal will come in where the appraiser thinks the opinion is at, but you already have a safeguard built in there of how you're going to handle this if it comes up. So that really became popular during COVID and still something to think about as you're experienced in the market there. The other thing here is an ROV, a reconsideration of value. So you and your client, you're representing the buyer, you get this back and you look at the appraisal and it's, 20,000 below what the purchase price is. So you can request from your lender here a reconsideration of value. And this is a newer topic here, or it's not a new topic, but there's increased guidelines right now that are out right now. And some of this isn't going to be in here because I don't have all that information. But basically, especially with Fannie Mae and FHA, and VA's had this for quite a while, they have a process for this. But you can ask to have a reconsideration. And so I put there generally the new guidelines suggest here that we would submit 5 new sales and then an explanation of why the other appraisal is deficient or didn't consider certain things. So I like this idea quite a bit because it opens up some dialogue, and dialogue is fine. The appraiser may stick to their opinion, but they also should be open to new information that comes up. So it's very possible that an appraiser does a search for comps. They're looking for all this information. And because maybe an agent didn't put it in correctly, or because there was some user error, they missed the sale right across the street that sold last month. So this is why conversation is good, even at the property. Make sure, hey, appraisers know, hey, here's some of the properties that we've been looking at that we're thinking support this. Mistakes do happen sometimes. But what happens a lot up until these new guidelines here is that when people had a request for reconsideration of value, they may send just their old CMA and they put 20 sales in there and they're just like, here, look at these. And that's just not enough. We have to give some explanation. And a lot of times those same sales they sent, and you look in the report, they're already in there. So then that's when it becomes a little detrimental. Like, well, are you really trying to help reconsider the value here, or are we just trying to throw some stuff and see if it sticks here? We want to pick a few good sales that were not in the report and then explain why they should be considered in this. A lot of times, I think you'll find that when you do that, you do come to some similar conclusions to the appraiser, but not always. Yeah, it's always worth taking a look and seeing if there's something that can be looked at. There are options to get a second appraisal. So they may find the first appraisal to be so deficient that the second appraisal can be looked at. And of course, a lot of times they will give you an opportunity to pay for a second appraisal. I know that's not what most buyers want to do, but sometimes that might be, if it's such a serious situation, that might be an option that people will do. And then a final option here is that you can do a complaint. Now, keep in mind that the state doesn't look at, well, they did this appraisal and it didn't come at this value. They're not worried about the value. They want to see, did the appraiser follow these guidelines from USPAP? Not just whether or not it hit a certain value. They want the appraiser to come up with an independent, objective opinion of value. But what we have to keep in mind is that they're looking at complaints about the way that value was found. So it is, in my opinion, a last resort. But if there are deficiencies, or if there are things where there's a bias of some sort or something that you read in there, then that is an option here that people have. Okay, so feel free to ask any questions there. If there's anything there about that process, I know that's one of the biggest questions that come up. The other thing we'll throw out here is, how can real estate agents and appraisers work together? Okay, big one here. If we enter MLS data correctly, I just gave an example there of how something had the MLS data because of the way they put that data in there, then an appraiser missed that particular sale. So if we put in MLS data incorrectly, we're only going to hurt ourselves here later when that data can't be found because it's filed incorrectly. So, a lot of times people want to put basements as above grade finished square foot to try and boost their listing. They want to say all the bedrooms or the bathrooms are on the lower level, or instead of using the term basement. And so then it gets skewed because that information is now downloaded and imported directly. And so a lot of times we really will have some problems if that MLS data is not correct. So two cautions with that. People who put MLS data in correctly, there's an easy button there on the MLS to report this. And that's what they encourage people to do. And they get thousands and thousands of complaints here about data entered incorrectly. Each of those results in fines from the MLS. So keep that in mind. It's just not worth it to take the extra few minutes and make sure information is entered in correctly. How many fireplaces, where the beds and baths at, what the site size is, what the size is of the unit here. Any of those kinds of things here. It really does matter that we get that in correctly. And then respond also to appraisers who are trying to verify data. So appraisers are asked not just to simply take the county's word for it, but they want appraisers to take this extra step of confirming it. That everyone has access to the sold data now. So they want appraisers to make sure, and especially when there's discrepancies. So for instance, a house sold at 500,000 and there's 25,000 in seller concessions. Okay, did the agent enter in the concessions wrong? Or is there some extra thing that was paid here that really needs to be understood here? So then appraisers have to reach out to these agents and verify, hey, did this sell for this? And did this impact this? Anything you can tell me about the condition of the property? But a lot of times they get ghosted on that. They don't get the information back. So when you get response, especially by email, just quickly respond back and say the information that you can about the transaction. It's all in the MLS usually, but we want to make sure it's correct and make sure of any details that need further explanation there. So that's a way that appraisers and agents can work together here and being able to make sure that data integrity is good there. So let's talk here a little bit about the current issues that are in the appraisal field. You've probably been contacted, quite a bit. It's ended now because the taxes are now issued here, but you were likely getting a lot of feedback here about what's my house worth because it was now being taxed um, at a much higher rate than it probably was previously. So that is an issue, especially in the assessor's office. And keep in mind, when you receive these tax assessments, just to look at what the form is actually saying, that it was worth X amount on this particular date. So it's not always current, and especially in a declining one, it can actually be worth more previously than it is even right now. But they have a different criteria of how they're selecting some of their sales for mass appraisal. And tax assessments are something to look at when you're trying to value a property, but it's certainly not um, a good indication of a current value. It can be in a stable market, but many times it can be off for a variety of different reasons. So tax assessors use mass appraisal, they call it, and they can be very limited because they're looking at large tracts and large portions of area that they're applying certain criteria here to value those properties. Another one is you're going to see a lot is this measurement system. And even as you decide to enter in your listings and you have the option of measuring something, you're going to see a reference here. Well, was it done to this particular standard? So we won't spend a lot of time on that standard. You can look it up. Unfortunately, you do have to buy this from ANSI here to be able to have, but it's $25 if you want the information. But what they're trying to do is to have some more balanced criteria here of how we measure properties. And so Fannie Mae has adopted this, that they want all of their reports to be measured according to this criteria. And a lot of big issues there are, where do the stairs fit into that measurement? How do we do when there's bricks outside of a property, brick facing, some different things there. So you want to keep in mind that that's kind of what they've decided is the gold standard. Now, new options like Kubicasa and Zillow's getting to this, and some others that have ways you can measure by your phone will claim to be in accord here with ANSI guidelines. But I've been impressed in general with how these are working. Yeah, basically for free, you can get a measurement of a house right now that's spits out a floor plan within 24 hours. So it is working, but be very careful when you look at it, when you finally get your measurement, that all the areas were gathered. It will show you some things, and if they don't make sense, you're going to have to go back out and redo this here according to making sure that everything got caught. So that's the downside of it, is that if everything didn't get scanned correctly, then it can't be to that measuring guideline there. So this is another thing to think about if you want an appraiser to come out. They can come out and do a measurement for you. Usually it's pretty discounted. But if you had an appraisal done, you get that measurement included. And usually for a little bit more, you can have them even do the interior rooms and things like that. And while Kubicasa and some of these are getting better and better, there's no great substitute to someone with their physical eyes seeing this and making sure that it meets this criteria here. Now, those measurements, especially when it's referring to bi-levels, where some of it's below grade tri-levels, or if people have made additions onto a property that they're not in the county records, any kind of discrepancies that way, great to have an appraiser come out and say, yeah, I think this will be no problem to list it with more square footage than maybe what's in county records, or to get another person's opinion of how we're going to market this by having someone be able to help you. Is this just a sunroom, or is this actually some gross living area that we could add to this when we put it on there? So something to think about for your practice there, if it's worth it maybe to have an appraiser help with that. Other issues are racial bias. It's sad here that this is kind of in here from the standpoint of appraisers are supposed to be known here as being impartial. That's what they're being paid to do. It's like virtually in their job description here. And I think you will find that most are, that they are not allowing external things, especially something like race, to influence their opinion of value. But unfortunately, you can look up some very infamous reports that have been made, and they went to court, um, and they won because there was some such flagrant things that were put into an appraisal report. So what's happened now is that there's real emphasis put on the wording that we use, and they're even being electronically scrubbed right now by a lot of AMCs and by Fannie Mae. And so if they see certain words in your report now, they're sending you a little letter saying we found these to be something that's not appropriate or allowed by Fannie Mae. And so you can get a warning, and then that can even lead eventually to not being used by them. Some things are flagrant, some things are a little unconscious bias, but it's raised the bar here to where we have to really be careful what words we're using in there. So I just had one just the other day that popped up saying the word desirable, because I was talking about desirable amenities in a very generic thing, but they thought maybe that I was using that word to describe something being more desirable than another. And now it's turning into, well, what is desirable? And is that from one segment of a population that they like this more than another? Well, we don't want to address those kinds of things in a report. We're appraising the property and not so much what maybe a segment of a population thinks about this or about that. We don't need to worry about that. It's taken some huge adjustment. There's a lot of pushback amongst appraisers, but it's certainly a big topic right now to make sure that there's nothing in a report that would show any kind of bias that way. And then spoke here about the new forms that will be coming out. I believe in last quarter of this year, they'll start to implement this on a beta type of program, and then 2025 it will become mainstream. Still waiting yet to see if FHA and VA will adopt these new forms. But while you see appraisers maybe use tablets and phones and things like that, it's going to change even more so in the future, where some of this will be going directly to software. And instead of this going on some kind of report that's could be even typewritten or like this, it's going to be on a different type of format that the consumer will be able to see. Keep in mind that all of this, though, is so that Fannie Mae and Freddie Mac and all these guys are able to they're able to easily take in the data and manipulate it and view it and make decisions based on that. So as much as I'd like to say this helps consumers with probably a better report, which it will, but the real reason is that they are wanting easier and better ways to be able to keep data and use that to help them. And then we just mentioned here the idea of being able to have ROVs. That's another big one right now that will be implemented. So appraisers, we're going to be seeing that more and more, that people have this option when the appraisal comes in low. Yeah. Significant changes will be happening here in the near future. And you need to understand this because these appraisal reports are going to start to look different, not only in the form that they have, but also in the way they're being done. So some of these are going to be called hybrid appraisal assignments. And I say going to be, they're already happening. So let me just paint a picture of how this might be. It's an appraiser gets an assignment, and it says someone else went and looked at this property, and they filled out all this information, and they've taken a video, they did a sketch, they have aerial imagery, and you just need to take this information now, and then you do an appraisal as if you went there. So that is possible. It's very possible. However, it's going to add another link in the chain here. So, the lender wants this. They ask an AMC. The AMC asks this person called a property data collector. And the low person on the pole appears to be the appraiser who's going to use all that to make an assignment. And of course, how much do you think that is going to get paid after all those things are taking a chunk out of that? So the quality of it, no doubt, will go down because, appraisers are going to have to try and do 2, 3, 4, 5, 6 of these in a day to try and make a living here at that for that profession. And so it's going to add a lot of things. Do we trust the data that this property data collector gave them? And was it from recently or was it from a long time ago? Those are all going to be things that are kind of getting worked out. What though if your appraisal for your client comes in low and then you find out, well, it was done with one of these hybrid things here? That would be something you can ask. Did the appraiser actually go to the property? That would be worth it. So when you see that report, look through there and find out, okay, is this the information given by someone else and then he just signed it? Or did he or she go to the property and look at it? So these are going to get more and more complicated in the coming years, and you need to kind of understand how was yours handled. Now, that being said, there's going to be times, and Joe can back me up on this, where people are refinancing and they have a really low ratio with their loan to value, and it's not necessary for an appraiser to go to the property. They may do it by other means. So there are times when this is really helpful, but when it affects your transaction, then there's going to be times when you may need to know a little more information about how this is being appraised. The other comment on there is about AI usage, and I attended the Valuation Expo last year, and so these guys were all out showing what they are envisioning the future, and it's going to happen. Is what I went away from after seeing that. So, especially with data collection, and I'm going to tie these 2 points in here together. You're able to now take your cell phone and you're able to scan this. I have a reference there to Kubicasa, that's the big one, but also Zillow has something like this too, where you're able to do 3D scanning. And so, not long ago, you remember seeing these cars that were driving on the road for Google, and they had a little spinning thing on top. And so those things cost like $20,000, let's just say 15 years ago. Well, Apple now puts that in a phone. So LiDAR is in a phone, and that's why you're able to do some of these kinds of scans, which is quite incredible. Also, there's companies like this one, AI, and also ProxyPix are some examples where they're using aerial imagery and they're using photo detection software that are taking your phone, you scan within the house, and then they're spitting out, we think it's in this condition, we notice this, and they're pretty accurate sometimes. So how information is gathered is going to change, and then AI is already something that can do that. We already know Zillow and some of these are taking this and making automated values. So AI can then take this and make a report out of it. So the steps aren't connecting quite yet, but you can already see how they're probably going to. Now, that's probably years down the road, but you should be aware of some of these things. How did the data get collected? When you look at the report, and then how was this report made here? These are questions to start asking in the future, and they may be accurate, or they may be that something was grossly misunderstood here or missed even. So automated values have their place in decision making. There's no doubt about it, but how they overlap with appraisals is still yet to be kind of understood here of how far can we go to trust these when we're getting ready to loan things, or they impact our life with how much a property could be valued. Okay, next question here is about how do appraisers come up with a value? And so one of the first questions that we want to talk about is, what kind of value are you looking for? And we sometimes, because of agents being in the field, we just think in terms of one, market value. We're thinking, if I go out there and put a sign in there in the yard, how long, not how long, but what kind of value what kind of interest am I going to receive here? What kind of purchase prices and what kind of asking prices do I need to be kind of thinking about here with this property? So we're thinking a little bit more about market value. But keep in mind, there's other things determining the value of something for what it's needed for insurance. Unfortunately, when foreclosures kind of start back in, the liquidation value of something here. Someone has this on their books, they want to get rid of it. How do they do so in the amount of time that they want to is a liquidation type of scenario. Things with personal value that we have towards something. So, the house next door, the market value to us may be worth one thing, but if it's the kind of house that our parents could maybe move into and they could help with this or that, or we could help watch them, well, we may even overpay. We have a personal value that we have on that property because we really need it for our personal needs. And things about taxes, what they're assessed at. So these are all different kinds of value. But what you're interested in is market value. And I copied this right out of Fannie Mae's appraisal report because this is the definition they're working with. Okay, they've taken this from banking dictionaries and things like that, and this is the value that they're going with. But you'll see some different even definitions of market value. They have some similarities here, but let's go through it real quick. It says the most probable price which a property should bring in a competitive and open market under all conditions requisite to a fair sale, the buyer and seller, each acting prudently, knowledgeably, and assuming the price is not affected by undue stimulus. Implicit in this definition is the consummation of a sale as of a specified date and the passing of title from seller to buyer under conditions whereby the buyer and seller are typically motivated. Both parties are well informed or well advised, and each acting in what he or she considers his or her own best interests. A reasonable time is allowed for exposure in the open market. Payment is made in terms of cash in US dollars or in terms of financial arrangements comparable thereto, and the price represents the normal consideration for the property sold unaffected by special or creative financing or sales concessions granted by anyone associated with the sale. So that sounds complicated, but you need to remember that that's what the appraisers are determining for a Fannie Mae appraisal, the fair market value here. And all of these are part of what that definition means. Now, sometimes part of that is not there for the definition of market value, but it can still reach the market value. But sometimes some of these things dramatically impact what that value could be. So that's something that we need to keep in mind, is that's the kind of value that they're trying to determine. So how do you determine a value? Well, you've got the income approach, you have the cost approach, and the sales approach. These are the three main ways. And I'll just give a brief description here. Income approach, of course, is generated with how much income a property can get. So Joe may work with investors, and they may be thinking a little bit, not so much how much is that property worth if I sell it, but what kind of value is that going to give me as a return with renting it, or short-term rentals, or doing things that generate income. And so that is an approach you can use to see what something could be valued at. The cost approach, if you're a builder, you're interested in this. How much is it going to cost to build it? Now, the problem with those other two approaches, though, is that in the end, what a lender wants to know is, if I get stuck with this property and we have to put a sign in the yard, how much is someone going to pay us for it? And so that's where the sales comparison approach has merit here. And in many of the avenues that you'll be working with, they're going to want to know what that means. So how do we find comps for the sales comparison approach? Well, let's look here at a brief video here. Just give me 1 second to pull this up here. And it talks here about a particular myth, they call it here. So I'm going to stop sharing and then I'm going to share this here, Joe. Okay, is that up?
Yes, sir. Looks good.
Okay. And this talks here a little bit about what we call the 1 mile rule. A lot of times people have heard this, but there's not just with regard to the 1 mile rule here, but we'll learn from this video here a little bit about other ways in which we can find comps here, basically. Okay, so that's a little something to kind of break up the monotony there when we're talking. So I'm going to actually just talk here for a little bit since we're starting to run towards the end here, to talk about some of those concepts that were mentioned right there. So and Joe knows from way back here, there was these kind of hidden rules that were kind of out there, and sometimes not so hidden. Maybe an AMC would tell you had to do it, that all your comps had to be within 1 mile. And then sometimes they'd go even further. If you're in an urban area, they have to be within half a mile. And that started leading to some bad appraisal practice, basically. And so, Fannie Mae put out this video right here to basically try and debunk this here, that this is not a requirement that you have to find things within 1 mile. And so you saw in the one video, some neighborhoods, they're oblong, maybe they're long and skinny, or maybe they go high from north to south or whatever. They don't all fit within 1 mile. Or maybe if your house that you're valuing here is at the top of that little box, and you go 1 mile, well, you're going into other markets when all the markets really, beneath it. So the importance here is not so much about how close, but about choosing the best ones that truly represent what that property is like, or that really have some impact upon the value there with it. So sometimes it's close, and then sometimes it's a little further away. But try and find things that really are similar there. So for me, I try and look at everything. I try to not be too generic. I may go 1 mile or 2 miles to kind of start here a little bit to see kind of what I'm working with. But then take a look at everything. For instance, if you have a 2-story, but you're on a golf course view, and your next door neighbor, though, it's sold and is a ranch, but you're like, well, I can't use ranches. But if it has a golf course, the same golf course view, that probably is one of the biggest indicators right there of what the value is of your property potentially. And so that's why you're able to use these different things that bracket some of the features. What I find a lot in talking to agents when there's maybe some dispute about things is that we also don't always look at all the different amenities that are playing a part here. So for instance, we have a 2-story home that's got 2-car garage. And so then the value came in a little lower than what people are expecting. And then they say, well, hey, here's some comps. And every single comp they give is a 3-car garage. Well, we can still use those probably, but we have to remember that certain amenities then are going to adjust that. The 3-car garage is going to be a negative adjustment, down for a 2-car garage there. And if one has a golf course view and one doesn't, then that's going to make a positive adjustment there. So we don't want to just cherry pick only certain things that are just trying to support our cause. We want to try to, at the very beginning, educate our clients here about all the things that are going to go into this. And some of those are going to be positives and some are going to be negatives. So any questions on that? Because that's certainly one of the biggest ones. I'm seeing one here.
Yeah, we had a really good one from Jason. How are other offers on a home taken into consideration by an appraiser? I realize that only closed comparables should be considered. However, if there are multiple offers on a home in a range that is above recent sales values, maybe the home is more updated or nicer, would those other offers be considered in the valuation, knowing there are other willing and able buyers around a specific price? I think that's such an excellent question, Jason. Aaron, what do you think on that?
Yeah, thank you, Jason. So yes, we should be including that kind of information in an appraisal report. It doesn't go right in the grid. Now they can, so pending and active listings can be used in there to show support, but they can't be used in the weighting of our opinion of value. But what they should be leading us towards some kind of conclusion. So I'll give you an example. You put 3 sales in there, 3 or 4 sales in there, and then you're wondering, okay, what's the market doing? Is it going up or is it going down? And so then you put some listings in there. I'm going to use some numbers here. All the closed sales are showing 500, but the listings that you're putting in there are showing 525 right now. And so that's going to give you an indication, hey, you know what? I think this market's increasing right now because these guys that are active are starting to show an increasing pattern. And so it could be appropriate then to put what's called a time adjustment on your sales. And that's what appraisers should really be thinking about. It's hard when the market's going so up and down, but you could put a positive time adjustment on a sale that was 6 months ago, and then that should bring it to where, hey, guess what? That's coming in pretty close at these active ones. I would still give all that kind of information to an appraiser, especially if they're close by or have a similar view or have something that's similar, given them the actives and under contracts. Agents are good at working together. Call the agent, say, hey, what are you under contract for? Do you mind if I ask? I got an appraisal around the corner here. Sometimes they might share something with you that you could share, not always, but the appraiser can put that information in there in the summary. Hey, this property got, 6 additional offers that were above asking price. That should give us support of like why we're saying we can do this. The hard part, Jason and everyone, is when it's listed for 500 and then it's under contract for 540. And so everyone's interested here. How are you going to justify this? And that's where we got to not use, I don't want to say get creative, but we've got to be diligent here. Yeah.
Totally. I totally hear you on that. List price seems completely irrelevant. I mean, I tell my buyers to be blind to list price, and it's really just where the bidding begins in certain markets, in certain conditions. So what I think what really has me baffled here, and I have been fortunate to have, won some bidding wars, but then like we oftentimes have to think, hey, where is this likely to appraise? But we're not just talking about pendings and actives, we're talking about other offers on that listing that are way above list, because maybe they listed it for all intents and purposes for $1. Let's play the Price is Right game. So list price is no longer relevant. Can you take other bona fide verifiable offers as, hey, like willing and able buyers in a specific range?
So I try to ask myself, hey, if this deal falls through,
Mhm.
and they go back out and put
Mhm.
this on the market, what's it going to achieve again? That's the reason rationale I try to use, and I would probably encourage you to have that with the appraiser too. Like, hey, I did list this at 500 and it's at 540, and I think that if this falls through, I'm going to put it back out at 540, and I bet it's going to get it in a day.
That's where
So
backup
that's
offer would probably be helpful as well.
yeah. So those kinds of conversations I think are good to have. The challenge the appraiser has is just that they've got to be able to find a way to prove that, and sometimes the facts won't quite support that. Especially when it's these large gaps, because you're correct, the 500 can be a starting point, the list price, but likely it has some merit because some people went into this thinking, I want to get close to this, or I think this is a reasonable thing to list it, to get people to come look at it at least.
So the list price
So
is considered in the valuation.
it is in the Fannie Mae report, you have to put it in there. They want
Sure.
to know the history of what's going on with the property. They want to
Yeah,
know the purchase
understood.
price, but then has it been listed recently and what was it listed for?
Mhm.
And then the reason for that is go the other direction. Hey, this was listed 3 times in the past year. It's a slower market, and it was
Mhm.
listed at 510 and never listed. And now we're saying it's worth 575. They want to know then what happened. Did this get
Sure.
remodeled?
Yeah.
It's just more commentary, but it's just one of those facts that they want to have understood.
Yeah. Makes
Yeah.
sense.
Yeah.
Thank you, by the way.
So, oh no, just good conversation in advance with some of that will really help. Yeah. Yeah. Any other questions on that about choosing comps? Yep. Okay. If not, I'm going to go to one other thing here. I'm just going to move this over so I can just look at it. Because I'd rather see everyone here and talk to them. So another question that's kind of one of the bigger ones that people come up with is about how to make an adjustment to comps in the sales comparison approach. So likely you've done a CMA through RE Colorado, or maybe you have software that you're using. Some of those can kind of work good, and then some of them are, I think, a little challenging, the way they kind of work. But here's just a few little things to kind of think about. When you're trying to get these adjustments, let's go back, 20 years ago. There was real common, hey, ask the appraiser. He's got this little secret sheet of adjustments that you can get, and you can just kind of start using some of that. Well, those kinds of days are gone. And the reason is that appraisal reports are scrutinized so much right now, and markets have changed so much that if you're still using some little cheat sheet from 1984 to determine what your adjustments are, it's going to lead to some real problems. So appraisers are expected now to do analysis on each job and determine what the adjustments really need to be. And you may have conversations with them privately, and they're saying, "Well, I'm seeing this here lately," but it changes. If prices during COVID went up 100 grand in an area, then those adjustments that we used to make even just a few years ago are dramatically out of whack now. So what you want to think about is trying to do adjustments on things, and you don't have to necessarily do it on every single job you're doing, but you should periodically be looking at, in this market, in this type of house, this is what I'm starting to see here with this particular amenity. So let's use just garages as an example. So if you begin to see like, hey, 3-car garages are getting this amount, and then other times 2-car garages are now getting this amount, then you can start extracting some things out of it in this particular city at this particular time. And then, start filing those kinds of things away, and you're going to start noticing some trends that you can use. And then what I would suggest is that you take those and put them into percentages. So you may start noticing, hey, the difference between a 2-car garage and a 3-car garage is about 1%, let's just say randomly, or 2%. So then as the market changes, your adjustments can kind of work with you a little bit, but you still need to check those every now and then to see, okay, our garage is still around 10,000 if it's on this kind of a house. Well, what if it's on a luxury home? We can't apply that same thing there to this that we did on a starter home to a luxury home, or one that's in the mountains as opposed to the plains or things like that. So just build those files here a little bit and then check them regularly to kind of see if those kinds of adjustments are still warranted. The way people get the adjustments, one way is the depreciated cost analysis. You take, let's say, a renovated bathroom and you see how much people are paying for that. And then you start to take off, well, how much is the depreciation on that? And one popular website's remodel.com that you can use this for, and it'll tell you on a lot of home improvements what people are getting back on their the returns they're getting on the amenity that they put in. So those kinds of things are out there, and conversations with builders and things like that can help. The biggest one that you probably want to think about is just a paired sales analysis. So you have one house that's sitting here, and you have one that's got a golf course view on the other side of the street. And if you can take out some of those other things and compare them, you're going to get an adjustment and say, this golf course is worth about $30,000. And then same thing, take that as a percentage of that, and you're going to start determining, hey, golf course views can add 10% or 15% or whatever you kind of determine. Hard thing with the golf course view is that not every view is the same, right? The view of the 3-putt thing as compared to being on, Cherry Hills is not the same. Or if you're on the premier 18th hole and everyone sees your mansion as compared to the guy that's getting bombarded with bad drives off the first hole, they could be almost a detriment to live there. So that's the hard part to say, oh, all golf course views are the same. They're just not. You have to do some analysis and try and figure that out for that particular place. So paired sales is good with individual ones. And then the last thing I'll mention is just group sales. So you may pull, let's just say, of a city, let's just say North Glen. You got a lot of homes that are very, very similar, these ranchers that are there. You may be able to pull all the homes that have 2 cars or no garage, and then you pull all the ones that have 1 car, get rid of some outliers. And if you compare those with the median sale price, like in an Excel spreadsheet, you'll see a group sales difference there. So that's a really common way that we can get that. Keep in mind that appraisers right now are using regression analysis and paying for data from huge software companies that are really helping them to determine some of these kinds of things. So that's something that they're doing, since they're doing it every single day. But most real estate agents don't want to pay that extra for something like that. So that's the majority of the information right there. So wanted to leave a little more time for question and answer, but anything you've got, I'll stay on as long as you like. So.
Well, speaking for me, I know I learned a lot. I've always learned a ton from you, Aaron, and I think this has been really excellent, and I really appreciate all the detailed information and understanding, how we can interact with appraisers. That's a big one that I think there's a lot of confusion around. So I'm really grateful for your sharing on that, and that's been my experience. Generally, when you call to schedule an appointment and they say, yeah, the lockbox code is 1234, go out at any time. Like, man, if you're listing a property, you really want to spend time with that appraiser and say, hey, here's the upgrades. Here's what we've done. We're on the 9th hole, like next to the green. This is why it's more valuable because of our golf course view versus, hey, this one over here is facing like the putt course, right? So I think that's really, really good information. And then, finally, let's open it up. Anybody else have any final questions that Aaron did not cover? Okay. Well, thank you guys for joining us. And Aaron, thanks so much for the time, man. Really, really appreciate it. And if you guys have other questions, Aaron, your contact information is in there. If you guys have specific questions, of course, reach out to Aaron, reach out to myself if you have loan questions, and reach out to Jerrod if you have questions or need help on title work. And I'm sure all 3 of us would be happy to help you guys anytime.
All right. Thanks so much, everyone.
Thanks, Aaron. See you, buddy.